Okay, so hello everyone. Thanks for each, each one of you that is here today. So in this session, we will be talking about Web3 and blockchain and the trends for the next years. But before we talk about that, the trends, what's coming for this amazing world, I would like to give a quick introduction about how it started. I think it's very important, very intriguing story. Okay, so just to make sure, someone from the organization, just one question. The clock here is not working, so I just want to make sure that I will be fitting my presentation in time. Just 1 second, please. Okay, yeah, okay, so it's working, yeah, I got it. All right, so yeah. Okay, so everything started when this guy, Satoshi Nakamoto, which is actually nobody knows who he is, he came up in 2008 with this idea to have a decentralized currency. And the reason why is because in 2008, at the subprime crisis in the US, many people were harmed by the weakness of the US dollars and the whole banking system. So basically the government saved all the banks, all the bankers, but many people were kicked out of their homes. And this guy was like, okay, this is not fair. We need better currency that, above all, it's not owned by anyone, not a central bank, not a government. So he came up with Bitcoin. And yeah, so the most interesting thing is that he created this network or system, and he mentioned that. So a system for electronic transactions without relying on trust, which basically means that people wouldn't have to trust on a bank or on a central bank or any centralized institution. And very remarkably, the first thing that was registered on the first block of Bitcoin blockchain, the Genesis block, was the cover of this newspaper, which at the time said, "Chancellor on brink of second bailout for banks." So basically, the government was saving the banks, and so that was the first thing that was registered on the Bitcoin blockchain. Okay, so now we know how blockchain was born. Let's take a look on, what is the difference of, this technology compared to what we have or we had in the past. So the first example shows what is a centralized network, right? So you have basically a database that relies on a central organization. But then the Bitcoin was born with blockchain, so both were born together. Blockchain was created to give life to Bitcoin with a decentralized architecture. So meaning that you have some nodes on the network, which are also known as miners. And this, every time a transaction goes through, between one wallet to another, then you have some peers on this network that will be responsible for confirming that this transaction actually happened. And then that also evolved to this other type of architecture, which is the distributed type of network. So both of them, decentralized and distributed, are part of this new architecture that it is blockchain. So yeah, what can we do with blockchain? So you can think of blockchain as a database. You can register any type of information in this database. So Bitcoin, what Bitcoin's blockchain does is it registers financial transactions with Bitcoin only. And then this need emerging from the market. Actually, a few people in this that were into Bitcoin were like, okay, so this can be used for much more things that not only Bitcoin. We can decentralize more things, not only money. And then it came up, many other projects that you might know as Ethereum, and many other blockchains followed. In all those new projects that came after Bitcoin, they are meant to be used for other specific purposes. But why we would want to decentralize things? Why we would want to register something on the blockchain? Okay, so first thing, when we talk about decentralization, why this is good? Okay, so we can think about our data, right? So our data, the data we have on Facebook, on Google, or any other service, Amazon, whatever, it's owned by actually these companies. It's not owned by us. Which brings us to ownership. Most of us, of course, we are okay with it, but more and more we are starting to ask ourselves, is that fair or is that right the way they are using our info? Because we know that they are using our info without actually our consent, right? Okay, so two other reasons why having things on the blockchain is really interesting. So one is immutability. Once something is registered on the blockchain, it cannot be changed. So if you have recorded a transaction or any type of information, you can be sure that this information will never be changed. So, and this can be applied to many, many other things, and we'll be talking about some of these use cases in the next slides. And transparency. So we have what is it called most of the times, private networks. And of course, in these private networks, you cannot really see what's going on. But in most of the blockchains, which are the public blockchains, you can actually verify everything that is happening on the chain. So it makes like audit and every need to access these informations very, very, or better than that, 100% transparent. So it opens us a world where we're not like manipulated by what centralized organizations are saying. You can just verify on the blockchain what's going on. Okay, and then with blockchain, we move to Web 3.0. So I think this image is the easiest way to describe what is Web 3.0 or Web 3. So in the beginning of the internet, or until a few years ago, we had Web 1, right? Web 1.0, which could be defined as, okay, give us your information, then you have access to our services. And then as like many platforms like Google, Facebook, Twitter became bigger and bigger, they became this sort of like centralized institutions for data ownership. So these guys, they know more about you than yourself. And it's crazy because it's true. I mean, Google knows probably what you had for lunch yesterday, but you probably don't remember. So, okay, but not to get too much on this topic, this is Web 2.0. So you would log in with this information that someone else has from you, okay? And then it comes Web 3. Thinking in a scenario where your personal information, any type of personal information is actually owned by you because it's on your wallet, then you would log in using your wallet. So meaning that when you log in using your wallet, your account that is on the blockchain, you are the only one that can authorize that. And the platform that you are using, every time that needs your information, it will be requested to you. Not to Google, not to Facebook or whatever, but to you. So yeah, I think this image is a very good way to describe what is Web 3. So yeah, let's talk about some of the trends that Web 3 is bringing. So the first one, and I suppose that most of you have already heard, is the DeFi, or decentralized finance, right? So what can you do with DeFi? Okay, you can do exchange. But why this is different? Because you don't have to create any account. You don't have to go through a centralized institution, do a KYC, provide your information, show you're real, you're alive, all that stuff. You can just go and exchange different assets. As of now, mostly cryptocurrencies, but many, many more applications are being built on top of that. And you can easily exchange one asset to another without requiring request, permission, or allowance for anyone. You can also do lending. So instead of going to a bank and ask for, money, or if you want to lend your money to the bank, you don't need to go through the bank. So this middlemen, and I think this is, a word that we see a lot in the blockchain space. We don't need the middlemen anymore when we have blockchain. If you have savings, if you are saving money, you don't need to keep that money on a bank that probably you're not earning anything for this money that you're actually borrowing for the bank. It's your money after all. I mean, when you have your money at the bank, it's the money doesn't belong to you anymore. It belongs to the bank. And if the bank is, liquid enough, they can return that money. But it's actually their money. Blockchain changes that. It is still your money and will always be your money. Funding. So you can, let's think about IPOs, for example. You are a company and you're looking to raise fund. You would have to apply for, many. You'd need to have banks on behalf of you. You would need to, ask permission for many agencies, like governmental agencies, regulatory, all of that crazy stuff. That makes not so viable for any company to raise funds and, centralized market. But then if you are on the blockchain and if you have a project and you want to get funded, you can just do it on the blockchain without using blockchain without asking permission from anyone. So you can do insurance and of course you can do payments as well. So this is just to mention a few, but this image I think it's also a easy way to understand what is a middleman and what's the difference of centralized finance, which is CeFi, versus decentralized finance. And that also describes quite well. So in the DeFi space, you don't have to ask permission for anyone. And that changes everything. So it's, open space, censorship resistant. So say you are in a country that, the president comes out and say, okay, you cannot do this anymore. Okay, let's give an example. If you live in Venezuela, you cannot have access to US dollars to protect yourself against inflation. You have to earn your money in Venezuelan bolívares, and you cannot exchange for any currency. You have to hold that, sorry for the word, but you cannot hold, other coins. You have to hold that shit coin that the government told you to do so. In the DeFi space, this is also changed. I mean, you don't have to rely or to obey what a president tells what you to do. It's much more cheaper and built on the blockchain, so open. So next trend, NFTs. So, and this is probably a very hot topic, right? Most things that we see about NFTs are just about monkeys, but that's not all. If you are an artist and if you have, written a book or if you have written a song, you currently what you would do, you would have to need maybe one agency or maybe a few behind you to distribute your art, your book, and to compensate you. And you don't actually know if this compensation that you are receiving, if this is 100% transparent. They will tell you they sold 1 million people listened to your song, and because of that you earned like $1,000, and you have to trust on that. But then when you have this on the blockchain, it's 100% transparent to see and to verify how many people acquired your art or your song or your book, and you get automatically compensated by this network. So again, we eliminate this middlemen. That can also be used for, tickets like events, certificates, diplomas. Okay, this is really interesting because when we get out of the university, we hold this piece of paper, right? With, a label, like a stamp on it, and everybody trusts on it. And it's crazy that, still people trust on it. When you have this on the blockchain, it's very easy to verify if that's, true or not. Trend number 3, tokenization. Okay, so say, for example, that you are a small farmer and you want to hedge your whatever you're growing, like you're growing coffee, and you want to hedge that. So if you are a big guy, it's easy for you to go to a stock exchange and buy and sell commodities, like do a contract to protect your harvest. But if you are just a small guy that would want to use these mechanisms, it's very hard for you to do that, and sometimes it's much more expensive. So it really doesn't work. But when you have this on the blockchain, you can easily be exposed to any kind of asset that has been tokenized. Buying, selling, hedging, or anything. So this opens the door for basically anything, really anything, to be tokenized. Which brings us to metaverse. The most interesting thing about the metaverse is that it gives you ownership for assets on the internet. So previously, before the metaverse, let's think about any game that is not on the metaverse. Any asset that you have there is just something that people can just print and invent, and you could have as many as possible. But when you have ownership for something that cannot be just replicated, like just printed, like you cannot just create new ones out of nowhere. That gives ownership, which in consequence it gives value to this item that you have. And all those items that you have in the metaverse, they are tokenized somehow, which means that this can also have a value on the real life. So the metaverse is not actually just bringing our lives to the digital world, but it's actually the bridge between what you own in the real world that can also be owned on the digital world, and vice versa. CBDCs, and I'm not really sure if that's good, but it's definitely a trend, and I will explain why. So currently the money that we have from the government, like fiat money, like paper money, it's not really traceable, right? So whenever we exchange that money, you go and pay for something, the government doesn't really know who is holding that money, or when or where that transaction took place. But when you have this on the blockchain, it's very, very easy to know when, where, who owns that money. And of course, this, can lead to actually very accurate taxation. For the government, it's also really cost saving, because if they don't have to print money anymore, or even relying on very expensive systems, to connect like banks to the central bank and etc. It's very interesting business for the government. One potentially interesting application for CBDCs is what we call cross-border CBDCs, which is if you want to exchange your euros for any other currency, it's probably a pain. If you do that for, you cannot do that like in minutes or even seconds. It's really a pain. But if you have this on the blockchain, like a CBDC, you can easily exchange one currency for another. So this can be potentially good for us, if we are using government money. So very interesting application, I think. 6 is smart contracts. So what smart contract does is they auto-execute functions that were predetermined. Okay, so let's say that the lock from your apartment is connected to any system that is using smart contract. So let's say that the payment is not done. This lock will be automatically informed by the smart contract, and you won't be able to enter in your apartment. Of course, many of these in the user experience side, when we have to consider humans in this equation, of course, it cannot be just rough as this example as that I explained it. But this is basically what the smart contract does. They execute predetermined rules that cannot be changed, and this is very interesting. So you can think of it just like any contract or any agreement that you sign, instead of you having to go to the court and need a judge to like execute it and tell who is wrong or who is right. The blockchain can just provide that auto executions automatically. And data ownership, I've already mentioned about that, and I'm really running out of time, so I'll be quick on this one. Whatever information that you have, it can be about your health, your habits, your identity. When you have this on the blockchain, it only belongs to you. And when someone wants to access that data, you have to authorize it. So I am Victor Mendes from Pundiex, Director of Business Development. And very quickly, it will just take a minute, I promise. Let me tell you what we do. So we do the crypto shop, which is crypto exchange offices where someone can go and buy, sell, and buy cryptocurrency easily. And we also do crypto payments. So we allow merchants to accept payments in Bitcoin and other cryptocurrencies and have this automatically exchanged to local currency so he's not exposed to the volatility. We have integrated our solution with most of the major POS manufacturers, like Ingenico, Verifone, etc. And we are now growing our presence in Europe. We are actually in over 30 countries at this moment and growing our presence. And we hope to have our solutions working here in Poland very, very soon. So thank you very much. If you have any questions or want to discuss more about blockchain, I will be happy to receive your email. And yeah, thank you.
Thank you very much. Thank you. Yeah, thank you. And we are moving right next to the next presentation that we have from Maciej